It is real estate reality time. I am so excited. I have a special guest today, and he's going to give us good news about the loans,
That's right.
what's happening with the rates. I'm so excited. This is Eric Becerra. Sorry.
It's all right. Becerra, if you can roll your
Bes-
R's.
okay, let's
But
try it.
that's
Becerra.
there you go. You're natural. Yeah.
Yes. And he is known as the Lone Wolf.
The lone wolf. That's right.
That's right.
So I do the hunting for you on the deal, so you don't have to.
There you go,
There you go.
folks. So let's dive into who Eric is. How long have you been in the industry?
Yeah. So I've been doing this now. November will be 28 years for me in the business.
Wow.
I started when I was 9 years old. Um, I know the mapping,
That
right?
took me a second.
Yeah.
Sorry. Yeah.
So no, I was actually
Redheads aren't good at math.
I was 19, so this is all I've done all my life. So yeah, so I've been. It's been a privilege. It's been good. There's a lot of ups and downs in this business. Seen a lot of different markets, and so yeah, 28 years, and I've done real estate. I've done mortgage.
Also, you've been on the resale side.
I
Too.
have,
Huh?
yeah. So prior to the meltdown of 2008, right? That's when it was. I felt like it was a little sexier to do both, and a little more accepted. I felt, but after 2008, decided I want to focus on one thing, and really double down on lending, helping people get into with their mortgages and the finance part of it. So, yeah.
So, what drives you the most? Is it the lending side?
Yeah, I mean, I hats off to realtors because there's a lot that goes into it in terms of, dealing with folks, their tastes and different nuances with the properties and locations and and the direction of the property, the numbers on the address, all these different things, right? That
Right.
matter to everybody. Numbers, it's numbers don't lie, right? Now, and that's why I like it because the numbers, they are what they are, but also helping people understand how those numbers help them and fit their needs and their budgets. That's where I thrive off, right?
So you're a
'Cause
numbers guy.
I am. I'm a numbers guy, and I love educating people about the numbers because I love it when it all of a sudden it clicks. And I'm like, oh yeah, okay, that makes sense. That's why.
Now, is it important to you to make sure that your clients know those numbers, understand those numbers, and what kind of process do you go through to make sure that the buyers really understand what they're paying?
Yeah. No, absolutely. It's very important. It's if you don't know what your numbers are, right, then what are you doing? What do you get? How are you buying a $300,000 or $500,000 home if you don't really?
Oh, I've had
understand?
clients they don't understand what's in their payment.
Yeah.
And
Yeah, that's tough. When I hear things like that, it really does disappoint me because that means the loan officer has failed them. And and even when there's been times when I felt that I've done the best job in explaining something, they'll walk out, they'll pick up the phone, they'll call the real estate agents, hey, explain these numbers to me, right? And I think that speaks more to the confidence and the trust they have in the real estate agent, right? Because many times that's where that transaction starts, right?
Sure.
But sometimes it's tough to have the conversation with the numbers guy because they don't want to feel maybe there's a little bit of intimidation or maybe I don't know. There's something that I think maybe holds them back from asking those questions.
Or they just want a house really bad.
Right, and they'd be like, okay,
So
whatever
they
you
just
say.
sit there and
Yeah. So to me, the process is very important, especially up front. Getting to know what the client truly wants and needs. And a lot of times, especially for first-time home buyers, it's at the end of the day, it's like, well, they just want to get into the house, like you said, right?
Yeah.
But okay, do these numbers? Does this payment fit me? Can I afford it? Do I have the money for the closing? At the end of the day, does all this fit my budget? And that's where, to me, is number one. It's important. Now, there's a lot of reluctance sometimes. There's some fear in actually sitting down with the lender for the first time about getting pre-approved because a lot of people will shoot themselves in the foot and say, well, I'm not ready yet. I feel my credit's not good enough. I don't think I make enough income without actually going through the process, right? And so
having a plan.
yeah. So that's my encouragement.
Because I always encourage my clients
Yeah.
to, get a really good lender so that he can help you with the plan. You may not be ready now.
Right.
But you will be ready if you do the right things.
Right. And that's the thing is finding out because again, even though you might think or you may know that your credit isn't as good or maybe your income's not in the best place, but find out, let's get a plan, let's set a baseline of where things are. Maybe 3 months, 6 months, a year, but at least we know, right?
You have a goal.
We have a goal. And so once we sit down though, it's important, I love, to me it's about options, right? Because there's a lot of lenders out there that'll say, well, here's today's interest rate, here's your payment, and this is the program that I think you best fit into. It's great, but what about all the other options that are available? And so at least I want my clients walking away knowing that that it's not just what I recommended, but it's what else they potentially can get. I love to leave that option up to them, and usually it's at least 2 to 3 options based on payment, closing costs, and what their goals are. All right, and obviously first-time home buyers' goals are going to be different than those that are moving up, our investors, and have been doing this a couple
Or
times.
refis.
Right?
And-
Refis,
yeah.
exactly. And so I do a total cost analysis to, in essence, say, look, it's not just about interest rate, because we all get hung up on just rates, right? But it's really about, well, what's the cost for that interest rate? What's that payment? How does that affect your interest rate, or your how does that rate affect your payment? But also, if your goal is to stay in this home for 3 years versus 10 years, well, then maybe the decision on how you're going to proceed and what kind of rate you're going to choose can be different. And notice I said what you're going to choose. I'm not just giving people their rate. They get to choose, right, based on whatever their goals
Or
are.
do they want to buy down the rate?
Exactly, buy down the rate. Yeah, that's a big thing, right? So especially in a higher rate environment, we get that a lot. In fact, well, what's it going to cost me to buy down my interest rate? Well, let's talk about what that is, but let's also look at your break-even point, and that's the conversation I don't think enough lenders are having with their clients, because we get you the lowest rate possible, but it's going to cost you $8,000 to save $250 a month. Well, when we do the math, that might take you 48 months, or 5 years to break even. But guess what? You might end up refinancing in the next year or two because rates are going to come down. So you might be wasting $8,000 out of your pocket just to get saved $250 a month. Those are the kind of conversations that I love having, right? And breaking down for my clients.
Because it's not one size fits all.
It's not.
No.
Yeah.
And are there now, because there used to be, like, during COVID, there was all different types of programs, like for medical professionals or people that work, they're police officers. Are we going to start seeing a little bit more of those types of programs come back? Or?
Absolutely, yeah. We're seeing those now. In fact, we have like a first responder program. So there's a down payment assistance program that for police officers, EMT. Your also will doctors, physicians, nurses. There's also one that will help those that are in civil employment. So state, county, federal employees, they can get there's some help out there for down payment assistance for them.
Is that for a short time, or like do you have to hop on it really quick?
No, it's a program that's been going on for about 1.5 years, 2 years. You have to be eligible for it. You don't have to be a first-time home buyer either, which is a big myth with some of these assistance programs. So it's available. You have to meet those eligibility requirements, but then I like to have the conversation, because although the money is there or the assistance is there, let's find out if it actually also makes sense for you.
Well, is the rate higher?
Because there's pros and cons. Yes, typically there's a little bit of a higher rate, and so there's pros and cons to that. You mentioned, loans for doctors. We have right now a doctor's loan, 10% down, no mortgage insurance, and we don't look at their school loans. So we don't care about school loans. So somebody that's basically, coming off from
another state, or gives them time to kind of less down, so it gives them time to make some money.
Absolutely. And so we can fund those loans 60 days prior to them starting their new job. So if they're relocating, they have an offer letter from the hospital, wherever they're going to go work at, then we can fund beforehand.
Okay, well, good. Yeah. Well, let's talk about the big elephant in the room. Let's talk about the new rates. Okay. The good news. Tell us some good news about what's happening.
Yeah, so interest rates have come down a little bit. There's all this talk about the Fed reducing the rate. They're supposed to be, I think it's this week, or next week. I forget the date. But regardless, there's been a lot of anticipation about the Fed meeting. And
there was a little shift this week.
A little bit. And that's what happened last time. Last time the Fed talked about reduced rates. Yeah, and so in anticipation of those rates, actually mortgage lenders started reducing the interest rates in anticipation of that. So to be honest with you, the day that the overnight lending rate was dropped by 0.25% or whatever it was that time, mortgage rates actually started coming up a little bit. So it's important to understand the difference between the Fed rate and what mortgage rate, because mortgage rates they're dependent on other factors, not so much the overnight lending rate, more so based on the bond, right? And so what we're finding though is because of the talks of this happening, interest rates have come down quite a bit over the last week and a half, and so there's been some relief. We've seen between 8% drop. Doesn't sound like a lot, but I want to say we've been at the lowest rate since the last 8 months, right? So I want to say we're
Well, the phones are ringing. I
They
think
are-
it's working a little bit.
yeah.
People are getting excited, so that's good.
No, it's true, and so
In anticipation, like you said, it's like
absolutely. But you know, one of the things we talk about a lot is that, well, let's not wait till the interest rates we have the actual rate drop, right? Which, and it may not happen, who knows? But we hope it will. But
because they're all going to come a running.
They are,
And those prices are going to get bid up. That's just what happens.
They are, and so it's like that's what we recommend folks to start now. Let's get prepared right now. If you're looking to buy a home, then let's figure out what things are looking like right now. If you have a mortgage already and you're thinking about refinancing, you know it's so hard to try to figure out or gauge it, right, and time that rate drop, right?
When do you take the dive?
Exactly.
Like, yeah.
Exactly. And that's all we got to be prepared. Let's do the work, the heavy lifting up front.
Yeah.
Let's take a look at your paperwork. Let's get you approved, and then I like to do what I call a strike rate. If it's for somebody that already owns a home and is thinking about refinancing, right? And what's that? Well, we'll figure out what that rate's going to be for it to make sense for you to refinance. And then we'll do the heavy lifting, we'll do the pre-underwriting, we'll take a look at your credit, your income, the documentation, all that. And when rates do get to that point, because I monitor these rates all the time, then I'll say, hey, this is the rate we talked about, which equates to the payment that you're looking for. Let's lock you in. And so so that's one of the strategies for existing homeowners. But for those that are looking to buy, not just first-time home buyers, but those that are moving up or moving down, right? That's a thing. That's a big issue right because of inventory, right? There's a lot of folks are hanging on to the homes, right? We see all this inventory is staying.
You got those low rates.
The low rates.
Lower rates.
Yeah, right.
Yeah.
Who wants to get rid of their 2% and 3% mortgage, right?
Yeah, for sure.
I think until the need and the dynamic is bigger than what that rate is, then a lot of folks will say, okay, forget about my lower rate. I really need a bigger house because my family's growing. I need to relocate, right? So I think those are things that we need to take into consideration, not just think about, well, I have a low rate, right? Now, there's for those that have a home that are thinking of moving up or moving down or buying the next home, there are bridge loans. So you don't have to make a contingent offer on that new property, right? If you have some equity, then
you have a stronger case.
You do, right? You don't have to wait till that property is sold. So also we're doing a lot of pulling out a lot of equity. For those folks that want to keep that 2 and 3% mortgage, leave that alone, right? And let's pull out the equity and let's use that to buy the next investment property or whatever they need it for.
Well, some of those sellers too, I'm finding I've had a couple clients before listing. They have assumable loans at really low rates. So if there's enough, right? If there's 300,000 or 400,000 left, some buyers can come in and maybe do some assumables. I mean, are you seeing a lot of that? Or
not seeing a lot of that. The thing with the assumable loans, I think in theory they're great. I'll give you an example. If somebody has a loan that's a $300,000 loan on a mortgage on it, and the seller is selling their property for $400,000, okay, assuming they qualify and eligible for that assumable loan of $300,000, the buyer still needs to come in with a
you have to come in. Yeah, it's good for people with cash.
Exactly.
That does have.
It does. Yeah.
That can take advantage of it. So yeah, you have to have some money.
Yeah, absolutely. Yeah, and which is great, but that's a great option. And now, not all loans are assumable, especially conventional loans. There's certain restrictions. Some VA and FHA loans typically are assumable, but again, you got to just read the fine print and see if it makes sense.
Right.
Yeah.
So, but not all VA loans are assumable, and do you have to be a veteran to assume it?
You have to be a veteran to assume it.
Yeah. Okay. So you still have to be a veteran. Yeah. Okay.
And you think, well, why not just get a new loan? Well, because maybe the interest rate was much lower, right? 2-3% instead of getting market rates.
And then you have enough to put down on the remainder, unless you find an assumable loan that has a bunch left on it.
Yeah.
Like if someone just moved there a year ago and then now they have to leave.
Yeah, they didn't have much appreciation, right, in the property. Yeah.
Yeah.
Yeah, and just got to close the gap.
Okay.
Yeah.
So then, when you talked about gauging when someone should make a move, and I know not everybody has a crystal ball. I don't have one. You don't have one, and how far are the rates going to go down, and are they just going to do a little bit like they did? And when do you gauge to tell your clients when to jump?
Yeah. Well, yeah, you're right.
And it's a small window too.
It is a very small window because once the news gets out, and we're talking about it, and we're making these phone calls, and we're reaching out to folks. By that time, it's like, well, you know, rates are like gas prices; they go up and down every day, and that's what a lot of folks don't realize. And so we may have 1 or 2 good days of relief in interest rates, and all of a sudden, now you're ready to have the conversation. A couple days later, you sent in the paperwork. Now it's 4 days later, and all of a sudden, you've lost that.
Too late.
Too late. Too late. So that's why I say, look, let's just have the conversation now.
Yeah.
Let's get you ready.
Especially if you need to move.
Absolutely.
Like if you're foreseeing a move, if you need to downsize or upgrade or all those things.
You know the thing about, and we kind of going back to the whole thing about why I like lending versus the other piece of real estate or the side of real estate. But that's the one thing that it sucks because the financing piece is not sexy. Right? Mm-hmm. So you guys get to, that's the emotional piece, right? You guys are selling the sizzle, the home, right? Mm-hmm. And so sometimes it's not until somebody finds a home they like, or all of a sudden they found it, they call you up, hey, I want this house, let's go look at it. Now we're rushing last minute. Are you pre-approved? Well, no. Go talk to the lender. Now we're rushing. Now we're like behind the 8 ball. Mm-hmm. And that can cause some issues. Although, yes, we can jump on it, we can make things happen, but that's not how you want to operate, right? Mm-hmm. So you can get the best, be the best prepared.
You have to be prepared.
You do.
I mean, it's just advantageous because sometimes you don't have that much time.
You don't.
So I mean, when my clients are, we're thinking about it. I'm like, well, if you're thinking about it, you still need to, position.
Exactly.
You need to position yourself. So if that means you need to, get pre-approved, don't wait till you find that house, people. Right?
Yeah, and again, I get it. It's not fun to provide a social security number and your documents, your tax. It's not fun. Nobody likes doing it, right? It's the worst part of it, right?
And but you get all the phone calls from the other lenders.
You do. And we'll talk about that
today. My clients always say, oh my God, we'll be in escrow. And they're like, I'm still getting phone calls from lenders. And I'm like, well, I don't know. It's part of the game. I don't know what to say. I mean,
it's such a nuisance.
I don't know how you can avoid that. But.
You can't. Well, there's a couple things you can do to minimize that. There's optout.com. 1-800. I can get that in the link here.
Yeah.
Exactly what it is. But there's actually a new bill that just passed. In fact, Shell's gonna share that with you. That Trump put into he signed on actually a 4th of July.
Oh, the phone calls.
Yeah, exactly. Yeah. And that's what it is. Really, it's that bill is going to make it illegal for other lenders to start soliciting folks that have not consented to that. Now,
well, it's not just lenders. It's
everybody.
But I mean, didn't that take effect February or?
Well, I want to say the bill started. It passed the House, and so Trump just signed it in July 4th, and it's going to be in effect March of 2026.
Oh, so okay. I must be thinking of. There's one for text too, because we were all warned, about our marketing, and people have to opt in. It's opting in. You have to be opted in, yeah.
Correct.
Or you could get fined.
You can
thousands of dollars.
You can, yeah. So yeah, you get all those pesky text messages. You got to have an opt-in option.
Right. I get probably 150, 200 a day.
I know.
So I don't think it's working.
Yeah, I don't think so. Not yet. Yeah. So, but that bill hopefully is going to give some relief because it really is. It's a nuisance because these, I like to call them scammers, they're calling people, they're texting people, they're making themselves look like if they're actually calling on behalf of, let's say, on my team, or they work with me. Or they'll come in and they'll say, oh, no, you don't want to work with them. They have horrible rates. We have a better deal. And some people, unfortunately, will fall for it, right? And so I tell all my clients, I have to pre-warn them every time. Make sure when you're going to get a bunch of calls and text messages, don't give out any of your private information and only talk to me and or my team.
Right.
So just be careful with that.
Things are tricky now. I mean, there's a lot of scams and money just flies right out of your bank accounts if you're not careful.
Yeah, what's with AI too. There's so many. Yeah, it's a little scary.
The AI. I mean, AI, and I love AI.
Yeah, of course.
I use AI 50,000 times a day to do my Excels or whatever.
Yeah.
To help me. It just makes processes go a lot quicker when you have to be a creative.
Right.
But I sat in a meeting at the Pismo Coast Association last week, and there was a guy from the FBI there that he talked about that whole thing about there is so much fraud going on with like sellers, people selling properties out from underneath people, and I mean it's a real thing.
It is a real thing. You think about they have now these voice capture systems where they can call you and they want to just capture your voice. so
Yes.
that they can now reuse it, recycle it, reuse it, and maybe I heard this just the other day. They're calling the mom, and it sounded just like her daughter. Mom, I got I'm in trouble. Send me $1,000. And so you got to be careful.
Yeah,
so.
you really do.
Mm-hmm.
Well, speaking of bills, I just wanted to ask. I don't know really anything about it, and shame on me. But the big beautiful bill. Can we get just kind of a little bit of? Just,
Yeah.
I mean, I'm just roundabout. What is the big beautiful bill?
Yeah. Well, I'm not.
Why is it so beautiful?
I'm definitely.
Or is it?
I'm not an expert on it by all means. But a couple of things that I grabbed from it that are going to be more relevant to our world in real estate is that there's an affordable housing tax incentive that's supposed to basically help. And I tell you right now, permanent expansion of the low income housing tax credit. So it's an additional bond threshold reduction. And so ultimately, it's just going to help with affordable housing in low-cost areas. So there's incentives for real estate development as well, and depreciation benefits. So this is interesting. So what it does, it makes permanent 100% first-year bonus depreciation for qualified property acquired after January of 2025. At the end of the day, it just basically what that means is that it's going to have powerful tax advantages for mixed-use developments, right? So those that are in the mixed-use development arena, there's going to be some more incentives. There's also an estate and gift tax threshold that's raised, right? Which is cool, especially
that's good.
Yeah, especially it's big for multi-generational family real estate businesses, right? That they're passing down properties, right? And so I think that makes things a little bit easier because there's when we think about the succession. The tax implications of succession and estate planning, it sounds like there's some benefits there, right? So those are some of the things. And the last one that really stood out to me was there's an extended individual tax cut and SALT deduction change. SALT as a state and local tax, right? Deduction cap that's raised to $40,000. It's for those people that have income of $500,000 and less. So a lot of these are very tax. They're based on different tax codes. I am not a tax preparer. That's my disclaimer, right? Speak to your tax preparer, your CPA, to see how these will benefit you. But ultimately, at the end of the day, it sounds like for me, it's the narrative, it's the nuance of I believe that some of these items in this bill are trying to help the housing industry, and I think on a local level, especially here in the Valley and on the coast. As these come in effect, there could be some benefit for our clients.
So is it all set out already, or are they still adding and taking away things in this bill? Do you know?
Honestly,
probably a work in progress.
I believe it's a work in progress. There's always things that are going to be adjusted, right? And from what I understand, it is set.
Our president's full of surprises.
Yeah. Yeah. So there's a lot of things that are it's set. But again, there's always some changes that we can expect.
Yeah.
These are the items that are proposed, and ultimately, I always say this, especially when it comes to politics and policy. I think it's really good for us to be aware of these things and know what's coming down the pike and how it's going to benefit or going to be a detriment to our situation. But let's not let those narratives, those policies dictate our intent, right? Meaning, a lot of folks I've talked to this year, there's a lot of ambiguity in terms of like what's going to happen with the economy, right? And yes, I would say there's some indirect effects of things that are happening on a global level and a national level.
Sure.
But at the end of the day, let's focus on what's going on here, in your backyard, with your job.
And not get so wrapped up in it.
Absolutely.
Because it can, people do get, this whole year, I think, is an example, consumer confidence. There's just been some consumer confidence issues, and I think people stay off social media and don't just sit there and listen to the talking heads all day long, because you tend to then start cycling into this negative, of what's true. Some of it may be true, but a lot of it may not be true. Right. It's someone's opinion. It
is. And, there's nobody really policing all these social media personalities, right? And so, it's great. It's good information. It's good to get informed that way.
For sure.
I think that's how most of us actually consume nowadays, right? I consume most of my news on social media, right? When I'm looking to buy something, I'm going on social media to look at reviews. So it's important, it's good, right? But
Or Chat GPT, or
right, absolutely. But
my new best friend.
I would say my biggest takeaway though is get with the professional, right? Sit down with somebody, live person, right? A local real estate agent,
With experience,
a local lender, yeah, and have a conversation,
Yeah.
And I like to say I'm like an attorney, all right? I'm not an attorney. I'm like an meaning. Give me the good, the bad, and the ugly, so that I, because I know sometimes folks can be maybe either embarrassed because of the credit, or the income, or whatever situation is. I need to know it all so that I know how to navigate this
Right.
and give you the best options possible.
That's right.
Yeah.
Right. To improve your situation, you have to be honest. You got to lay it on the line, and not all of us like to do that. But that's, I mean, you have to do it to create that goal of home ownership, or whatever your real estate goals are.
Absolutely, that's necessary. So yeah, it's important. Again, a deal, working with local professionals. Somebody you could walk into their office, right, and you can look at them in the eyes and hold them accountable for what's going on. Because there's a lot of times there's a lot of these online lenders or even agents that are out of area that need that you want to work local.
Absolutely, absolutely. And I feel, well, with all of my clients, it's a personal relationship, right?
It is.
I mean, and that's how I've built my business for 15 years. Is so they come back, right? It's a personal relationship. They know you're a real person. They know that you're legitimate, that you have their best interest. So it's the same thing with your lender.
Yeah, it's important, right? Because I want to know that. Well, you want to know if I'm in your shoes and I want to work with somebody that's going to be reputable, that I know that if I'm in the supermarket, I'm going to feel confident and feel good about running to my clients and show my face and shake their hand and hug them out and hey, that I did the best that I could for them.
Because we're all in this together, people.
We are. Yeah, we are. Yeah.
Is there any other advice for anybody out there sitting on the fence? They're getting excited. What do you think they should do right now, just to kind of
get
it going?
I just kind of goes back to the same thing: is go out, reach out for and to a real estate agent or a loan officer, and sit down, make the appointment, sit down with them,
or talk to two.
Talk to two. Yeah, sure,
I mean.
Yeah, and that's actually a good point.
Comparative. I mean, I always tell everyone, hey, if you're going to hire a listing agent, talk to 2 or 3 of them, and compare and do your homework. Same thing with the lender, right?
That's the thing. That's what makes the market great, right? Is that we're all competing, right, to give the best deal, but also the best service, right? And so figure out that you're gonna jive, gonna click with them, because that's important, right?
That's right.
That you feel that you have this connection with your realtor, with your lender. But I would say don't wait, don't think about it so much, and reach out to the lender, reach out to the realtor, and let's find out. Let's just put it out there. Let's find out. Let's start now, and don't wait till the last minute. That would be my.
Be real. You got to find somebody who's real, who, it's going to do good things for you, and not put you in a bad situation.
Yeah.
Because there are those professionals out there that really just want a quick buck. They don't. They just want to.
Churn and burn, right? And and it's true. It's important. That's why, it's good to ask questions, look at reviews, and also referrals, right? And so that's one of the things. In this community, in any community, real estate is very small. We all know each other and of each other, right? And so it's important that when you're working with the right team, because when you're putting that offer in on that property, the agent on the other end is going to have a recommendation with their seller of maybe which direction. Maybe they can't tell them which way to go. However, they gotta tell me, hey, maybe I had a bad experience with this lender or whatnot, right? But that goes a long ways, that you can perform and that you're reputable, right? Because at the end of the day, we all know each other.
That's right. That's right. Well, thanks for coming by.
Yeah, thanks for having me. This is fun.
You're awesome.
Yeah, thank you. Appreciate it. Appreciate you doing this, and I love your platform.
Well, thank you.
Yeah.
Thank you. And thank you, everyone, for joining us. And we'll see you soon.
Yeah.
Ciao.
We'll see you next time.
All right. We'll have to
put this in the bloopers.
Bloopers.